Welcome to Dividend Income. In this video I'm going to talk about REITs I've been buying. These are new positions that have been in my watch list for a very long time. This is a sector I haven't bought into yet and there's a gap in my portfolio diversification. Now, what is a REIT? REIT stands for Retail Estate Investment Trust. Companies that own and typically operate income producing real estate or related assets. So this is a great way to get involved in real estate without the headache of buying a rental or trying to flip a house. The two REITs I've been looking at are Realty Income and STAG Industrial Inc. Looking at Realty Income, ticker symbol O first. Founded in 1969, Realty Income Corporation has grown its real estate into commercial properties across the United States, Spain and the UK. Realty Income is a firm favourite with dividend investors. A lot of this has to do with the fact that it pays dividends monthly. It even has a registered trademark phrase, the monthly dividend company. This is all over their website. They own over 11,400 properties, totaling 213.9 million leasable feet. If we have a look at the top 20 clients, they're fully diverse across grocery stores, restaurants, drugstores, home improvement, health and fitness, general merchandise, automotive service. So you've got Walgreens, 7-Eleven, FedEx, LA Fitness, AMC Theatres, Red Lobster. So they haven't really concentrated on one particular industry, which is great. Fully geographically diverse as well. So we've got the UK and the US as well here. Texas, California, Illinois, Florida. And obviously Spain, which we mentioned earlier, to a lesser extent. Realty Income has a market cap of 34.3 billion. It has 617.577 million shares outstanding. It has a current yield of 5.4%. It pays just over 24 cents, usually around the 15th of every month. The last dividend increase was in September. They tend to increase the dividend every 3 months, not by much. The last 3 raises have been by half a cent, but this builds up over time. If we look at the dividend history, it has had 117 dividend increases since 1994, with 100 consecutive quarterly increases, with a compound average growth rate of approximately 4.4%. Some other good points are it has an A3 corporate debt ratings from Moody's, Standard & Poor's, which is great, as companies prefer to deal with companies with great credit ratings. It has long-term real estate leases, providing dependable revenue, so that they can continue to pay dividends. It has asset growth from 630 properties in 1994 to 11,427. It is a member of the S&P 500 index, and it is also a member of the S&P High Yield Dividend Aristocrats index. Bad points: Realty Income Corporation has a trailing 12 months PE of 14.62 compared to the REIT and Equity Trust. Retail Industries PE of 11.94. So it is a little bit high. If we look at the Q2 financials, based on year, mostly everything is up, apart from net cash in hand. Q3 is coming up on November 3rd, so it will be interesting to see how it is progressing. If we look at the share price, it has hit a 12-month low recently of $55.90 with a high of $75.32. So I'm glad I did not start the position earlier in the year, although it is very difficult to time the market, and who could have predicted all the global issues we've had. The low is now, so the price could easily drop further. If we have a look at what the top 10 institutional investors are doing, we can see that all 10 have increased their positions by a significant amount. Cohen and Steers Capital Management scooping up over 3 million shares. Then if we look at the top 10 mutual funds, 8 of the 10 have added more shares. Only 2 have sold, but it is a relatively small amount compared to what has been bought by the other 2. A quick calculation, so that's just over 8 million bought and 22,542 sold. Quick overview of what the analysts think. ID Trading Platform have a buy rating. TipRanks have a moderate buy with a target price of $71.94. MarketBeat has a moderate buy rating with a target price of $75.14. Seeking Alphas, Wall Street has a rating of buy. So buy ratings across the board here with potential of 30+% upside in the stock price. Next up is STAG Industrial Inc., ticker symbol STAG. STAG Real Estate Investment Trust focuses on the acquisition and operation of industrial properties throughout the United States. It's got an enterprise value of $8.1 billion. This covers 111.5 million square feet, over 40 states with 559 buildings. There's a market cap of 4.96 billion. So 179.216 million shares outstanding. It has a current yield of just over 5.2%. This is an annual dividend of $1.69 per share. If we look at the dividend history, the dividend growth is very slow with minimal increases, but it does pay monthly, which is a bonus. If we have a look at the financials, for the 6 months ending the 30th of June, it increased revenues by 18% to 320.7 million. Gain on sales of rental property increased by 96% to 24.3 million. Net income has been kind of fluctuating, fired back on 2020 and 2021, a little bit of a pullback. Total equity has been in an upward trajectory, same with cash from operations for the cash flow. If we look at the stock price, it has had a 12-month low of $26.56 with a high of $48.27. Again, like Realty Income, the low is now. If it does drop more over the next few months, there will be dollar cost averaging in. If we have a look at what the top 10 institutional investors are doing, we can see 8 of the 10 have increased their positions. Long Pond Capital increasing their amount by a whopping 21.68%. Then if we have a look at the top 10 mutual funds, 6 of the 10 have added more shares. 3 have sold, and iShare Russell have not bought or sold anything. From the 6 that have bought, that is a total of 155,606, and sold is 322,037. The biggest seller being Carolyn Scout Mid with 286,000. Let's have a quick look at what the analysts think. IG Trading Platform have a buy rating. TIP ranks has a strong buy rating with a target price of $38.68. MarketBeat has a buy rating of 41.40. Seeking Alpha's Wall Street rating is a buy. So buy ratings across the board there with an average of just over 42% increase. Overall, both companies have strong growth potential, strong investment backing and monthly dividends. I mean, who doesn't love monthly dividends? I have been buying both, but mainly focusing on accumulating Realty Income. This is a stock that has the best growth history. I purchased some on Monday the 17th as it was still down. There has been a mini rally since then. Who knows where it is going to go next? It's all about dollar cost averaging. Thanks for watching. Quick disclaimer now. As always, you should do your own research when investing. I'm not a financial advisor and these are my own personal views. If you've enjoyed the video, please like and subscribe. And here are 2 more videos you might be interested in.